Hello, shiny happy people. Melissa with White Diamond here. And if you watched my recent video outlining the overview of the 2020 market versus the 2019 market, you will remember that I teased you about talking about the economic impact on an individual basis, because within that video I talked about the economic impact of the real estate market on our economy as a whole, both state, local, and federal level. But I didn't get into what it means to a person's economics. And so I let you know that I would be bringing out a video for sellers and their personal economics and a video for buyers and their personal economics. So here we are. I'm talking to you homeowners out there, how real estate affects your personal economy. So whether or not you're thinking about selling, it's very important to know on a periodic basis what the equity is in your home. So what equity is the difference in what your home is worth versus what you owe on your home. So let's say, for round numbers, you owe $300,000 on your home, but your home is worth $400,000, you have $100,000 worth of equity. Why is it important to know that? Well, for a couple different reasons. First of all, your home is your home and you live in it, and it's where all of your memories are made, but it's also part of your portfolio. So it's important to know what that equity is. It's also good to know that should something happen, that you maybe need home repairs, or you have a child going to college, or something unexpected happens, it's nice to kind of have an idea of what kind of equity you have in your home, because that is something that you could leverage on and get a home equity line of credit on, to use that money and leverage that equity that you've been building over the years. So if you've been in your home for more, around 3 or 5 years, even if you're not planning on selling it anytime soon, it might be a good idea, and not through Zillow, because those are not accurate, newsflash. Might be a good idea to reach out to a real estate professional and say, hey, could you just do kind of a quick market analysis? You don't need a formal appraisal necessarily, but just kind of give you a ballpark idea of what that means. Now, if you are thinking of selling, something that, a question that I get a lot of times that people are concerned about is what kind of taxes they're going to be paying on when they sell the house on the money that they get back from it, so the proceeds from their sale. And most of the time, I'm honestly able to say zero. Back in the 90s, what is called in the business world, in the tax accounting world, in the IRS world, it's called capital gains. So when you sell a property for more than what you bought it for, the capital gains is the money that you make on that, and you are supposed to be paying taxes on that. Well, in the 90s, that became for your primary residence, that became tax exempt. So if you are a single person who owns your home and you sell it and you make less than $250,000 capital gains, so profit on that, and that is an adjusted amount. So after your mortgage payoff, after your expenses, after whatever improvements you had put in there, like let's say you replaced windows or a roof or whatever, so that adjusted value, you pay zero taxes on it. If you obtain more than that, then it's the difference between $250,000 and what your actual walkaway is what you're taxed on, and that is considered a long-term gain as long as you have held the house for over 2 years. So it's actually a pretty minimal thing. Now, if you are a married couple, then that amount is $500,000. Now, of course, there's always rules. You have to have used that home as your primary residence for 2 of the past 5 years. So you have to claim it as your primary residency. No taxes. Hopefully, you already know that your other tax advantages on a personal economic level is that your mortgage interest has been a direct deduction on your income taxes at the end of the year, as well as your property taxes. Now, this is also true for a home equity line of credit. So if you find out that you have X amount of equity in your house and you're like, whoa, you know what, we've been thinking about getting new windows or a roof, why don't we pull some equity out of our home to do that? That mortgage interest is also tax deductible. So that's some win-win there. So that is why homeownership is so important. It's such a big factor in your private personal economy world, that it really does help you grow your wealth. I mean, the statistics show that homeowners have significantly more wealth than renters, so you made a good decision. Great job. Now, the other question I get is if you are trying to sell in the near future, how you handle that is whether you do it on your own or whether you use an agent, because a lot of people want to save money by not hiring an agent. So I'm going to tease another follow-up video on the pros and cons of selling yourself and how that can actually affect your bottom line, and you'll have to tune in to find out whether it's good or not good when you use an agent. Oh, I wonder what the answer is going to be. So that's it, shiny happy people. I hope this was helpful. I really enjoy bringing these little tidbits to you. So bravo for being homeowners. Yay for boosting your personal economy. Oh, I didn't mean to punch you up. Yay for boosting your personal economy. And if you have questions, if you want to know what kind of equity you have in your house, you know who to call. Thanks so much. Take care.